Welcome to Transitions LifeCare. Full-time employees who work 30 hours per week and have completed 30 days of service have the option of enrolling in benefits. In this benefits presentation, we are going to be covering medical, dental, vision, basic and voluntary life insurance, short and long-term disability, flexible spending and health savings accounts, and 403(b) retirement plan, as well as other optional benefits. We will also cover paid time off, long-term sick bank, and bereavement policies. You will be electing your benefits, adding any eligible dependents and your beneficiaries using our online enrollment process in our Paycor payroll system. You will have the option to add dependents to your coverage. You may add your legal spouse or children under the age of 26. If you will be covering a dependent, Social Security numbers are required along with dates of birth for each dependent. The only other times you can enroll or remove dependents from your coverage is during our open enrollment period, which is a 3-week window in November, and benefits would be effective on January 1st of the following year. The other times you may add or remove dependents would be if you had a qualifying life event such as a birth, marriage, divorce, death, or if a dependent gains or loses coverage. If you have a qualifying life event, you must notify Human Resources within 30 days of the event in order to add or remove the dependent from coverage. We will begin this medical insurance. We offer employees 3 different plans to choose from. The first option is a PPO or Preferred Provider Organization plan. The second option is a Point of Service plan, or POS. The third option is an HSA, or High Deductible Health plan. The 3 plans differ based on premium cost, how much you pay when you would receive care, and the maximum out-of-pocket cost. You will receive your medical ID card in the mail at your home address. The PPO and the Point of Service plan require a copay for primary care and specialist visits. The POS, or Point of Service plan, has a more limited network. Both plans include in- and out-of-network providers. Costs for the out-of-network providers will be higher. There is an annual deductible that is required for certain services such as inpatient hospitalization. Once the deductible has been met, you would continue paying co-payments and co-insurances until the annual maximum out-of-pocket limit has been met. With the PPO and the Point of Service plan, you have the option to choose a flexible spending account, also known as an FSA. If you elect an FSA, you can put aside pre-tax dollars which come from your paycheck each pay period throughout the year. The maximum amount you can elect is in your benefits summary guide. FSAs are IRS regulated, so you must always save your receipts for any medical, dental, or vision purchases that you use for flexible spending dollars for, in case of an audit. The nice thing about FSAs is that they are front-loaded, so you have access to the full amount that you have elected on the first day you are eligible for benefits. You can use the FSA dollars for any eligible medical, dental, or vision expense, such as prescription drugs, co-pays, eyeglasses, and first aid kits. You will receive a debit card in the mail from the FSA vendor, and you can use that to purchase your eligible medical, dental, or vision items. You can also pay for items out of pocket and be reimbursed by filling out a claim form online. You can also roll up to $500 at the end of the plan year, but any amount over that would be forfeited. You don't want to plan too high when enrolling in a flexible spending account. You also have the option to enroll in a flexible spending account for your dependent child care. The amount you can set aside annually to pay for your child care can be found in your benefits summary guide. The total amount you elect will be divided up by the number of payrolls remaining until the end of the year. The Dependent Care FSA works a bit differently than the Medical, Dental, and Vision FSA. You have to pay your dependent care expenses out of pocket, and then you reimburse yourself with only the amount that is in your account. Any amount remaining in the Dependent Care FSA at the end of the year will be forfeited. If you elect the Dependent Care Flexible Spending Account, you may be enrolled in the PPO, the Point of Service, or the HSA medical plan. The Health Savings Account, or HSA medical plan, is a high-deductible health plan, and everything is paid out of pocket until the annual deductible has been met. This includes prescription drug costs as well. Once the deductible has been met, you would continue paying coinsurance until the annual out-of-pocket maximum has been met. At that point, everything would be paid in full. With the Health Savings Account medical plan, you may elect to put pre-tax dollars into a health savings account, or HSA, for eligible medical, dental, and vision expenses. Please see your benefits summary guide for annual maximums that you may contribute. Individuals who are 55 years old or older and not enrolled in Medicare may be eligible to make catch-up contributions as well. Like the flexible spending account, you will receive a debit card to use for eligible expenses. The HSA works like a personal savings account and can be taken with you if you terminate employment from Transitions LifeCare. Any remaining dollars in your HSA at the end of the year will roll over so you don't forfeit any money. You may use your HSA dollars for any tax dependents, even if they are not covered by your health plan. Please see Benefit Summary Guide for further details. We will now move on to the dental insurance. Transitions LifeCare provides dental insurance which includes diagnostic and preventive services, as well as basic and major services. Diagnostic and preventive services include 2 oral exams and cleanings per year, as well as x-rays, and are covered at 100% with no deductible. Basic services, which include fillings and extractions, are covered at 80% after a calendar year deductible. Major services, which include things like crowns and root canals, are covered at 50% after a calendar year deductible. Orthodontic services are also available for adults as well as dependent children. You will receive your dental ID card in the mail at your home address. You may go online to search for a participating dentist. You can visit a non-participating dentist but may be required to pay for your services up front and then get reimbursed by filing a claim form. Please see the Benefit Summary Guide for premium costs and more information. We also offer a vision plan for annual eye exams and materials, which includes frames and lenses. In a 12-month period, you may select frames up to the annual allowed amount. Single, bifocal, and trifocal lenses are covered in full. Progressive lenses can be purchased as well, but you would be responsible for the difference between the trifocal and the progressive lens cost. You may also use the vision insurance for contact lenses instead of frames and lenses if you choose. Other options are available, such as scratch, ultraviolet, and anti-reflective coatings at a discounted rate. You may choose glasses or contact lenses each year. If you choose eyeglasses, you may receive a discount on contact lenses as well. An annual eye exam is covered under the vision insurance plan, and you would be charged a copay. Please see your Benefit Summary Guide for premium costs and further details. Short and long-term disability is provided by Transitions LifeCare at no cost to the employee. For short-term disability, the benefit provides 60% of the employee's gross income up to a maximum weekly benefit, which you will find in the Benefit Summary Guide. The maximum benefit duration for the short-term disability is 11 weeks. Long-term disability would kick in after being out of work for the 11 weeks and provide 60% of the employee's gross pay up to a maximum monthly benefit, which you will find in the Benefit Summary Guide. The maximum benefit duration is up to the normal Social Security retirement age or upon returning to work. Employees must be approved to receive the short or long-term disability benefit. Transitions LifeCare provides $25,000 of life insurance at no cost to the employee. Employees can also elect voluntary life insurance coverage for themselves, their spouse, and dependent children. If purchasing life insurance for a spouse or child, the employee must also elect the voluntary life insurance for themselves. The employee voluntary life insurance is available in $25,000 increments up to $150,000. Evidence of insurability is required for any amount over $100,000. The voluntary spouse coverage is available in $10,000 increments up to $50,000. Evidence of insurability is required for any amount over $30,000. The voluntary life insurance for children is $10,000 in coverage for each child up to age 19 or age 26 if a full-time student. Please refer to the chart in your benefits summary guide to figure out the cost for the voluntary life insurance coverage. You must provide a beneficiary regardless of whether or not you elect the voluntary coverage. You may also enter a contingent beneficiary. If entering more than one primary or contingent beneficiary, you need to enter a percentage for each to make sure the total is 100%. Transitions LifeCare sponsors a 403(b) retirement plan as part of its benefits package. New employees working 20 hours per week or more may begin to make salary deferrals into the plan as soon as administratively possible after the date of hire. Employees will be auto-enrolled at the 3% pre-tax contribution level. Employees will have a 30-day window to opt out, increase or decrease their contribution amount, and can choose pre-tax or post-tax contributions up to the IRS maximum annual amount. If 50 years old or older, employees may contribute an additional amount each year. Please see your benefits summary guide for further details on the maximum contribution amounts. After 1 full year of service, Transitions LifeCare will contribute 4% of the employee's salary regardless of whether or not the employee contributes. There is a 5-year vesting period for the employer contributions. This means if you terminate employment from Transitions LifeCare, only a percentage of your employer contribution would be yours unless you have 5 years of service or more. A representative from the retirement vendor comes to Transitions LifeCare to meet one-on-one with employees and to help you enroll and answer any specific questions you may have. Transitions LifeCare provides paid time off, or PTO, to full-time employees for the purpose of rest, relaxation, illness, holidays, personal, and family needs. You will start accruing PTO on the first day of employment, but cannot use your PTO time until after completing 90 days of employment. The only exception to this is if a holiday falls within the first 90 days of employment. Please see the chart in your benefits summary guide for amounts of PTO accrued for each pay period. At the end of each calendar year, if you have any remaining PTO, the first 60 hours will roll over into the following year's PTO bank. Any hours in addition to 60 that has rolled over will be placed in a long-term bank. The long-term bank hours can only be used for an FMLA qualified leave. The maximum number of hours you can have in the long-term bank is 480. If you terminate employment with Transitions LifeCare, a percentage of PTO and long-term bank hours are paid out based on years of service and if you have given sufficient notice and are eligible for rehire. More information can be found in the Employee Handbook. Up to 5 consecutive work days of bereavement leave is available for employees should they experience a death in their immediate family. 1 day of bereavement pay will be granted to attend the funeral of other relatives or close friends. Bereavement leave is available after 90 days of employment. Please see your benefit summary guide for other voluntary benefits that are available to you at full cost. You will be required to enroll in or decline your benefits during your first week of employment. If you have specific benefit questions after listening to this audio presentation, the benefit specialist will be available to answer them during your scheduled benefit session. This concludes the benefit session for Transitions LifeCare. Thank you.